Hello, everybody. Welcome to Thursday. The S&P 500 was down a little bit more than 0.2% today. Really kind of just a sideways day, or up a little, down a little today. I think that, the pattern is there to have a little rebound. It would have been good to see a positive day today. Earlier this week, we had two up days, and then we had a down day, didn't set a new low, and it bounced, yesterday. So today would have been nice to see another movement upward. The pressure of the trade war, a potential trade war, April 2nd is the next, deadline for a lot of these things. It's probably weighing on the market. We got some good data today that shows that the, economy here is still holding up. And I know a lot of people are saying the economy is getting softer and what have you. If you look hard at the numbers, it's still doing quite well, actually. What isn't holding up is kind of the surveys, the expectations. And again, I've said in the past, a lot of those times, those surveys and such, people will answer one way, feeling nervous about the market, and then go out and spend money. Let's wait and see what happens with some of those data, because we saw the housing data and the jobs data was good today. I think that what you're seeing here is just some uncertainty about what will happen. I think we have to kind of wait and see, as far as that goes. I know I've been saying that a lot, unfortunately, but that's kind of just the way it is. Could be an opportunity or what have you, could not be. One of the things to understand is that the market doesn't really completely understand how these trade situations will work. You got to play through the numbers, so to speak, to kind of think about this. So let's say, for example, that there's some tariffs and some companies decide to absorb some of those tariffs. I know BMW of America has said that they're going to absorb some of those tariffs and try not to pass along the price on their cars, for example. So that would affect the earnings ability for BMW of America. Well, BMW America is not a very big stock, obviously, and so it has to be a stock that's a big stock that really impacts these indexes like the S&P 500. You can get an overall scenario that causes a recession or higher inflation. So we'll have to wait and see how that plays out. But when you look at it from a specific standpoint, I keep going back to 2018, and I keep thinking about how worried the market was about these tariffs. And really, the market came back pretty quickly, and these tariffs are still here. And really, my thought process is continuing. Hey, we were wrong in 2018. The market dropped 19.6%. We've dropped 10% here. So, maybe we don't go down as far, what have you. I think the part of the difference here is that the threat of the tariffs, in terms of the size, is much bigger. So we'll see how that plays out. But we don't really know how this is going to impact, the earnings, and how this is going to impact inflation, and whether this is going to cause a recession. I know that the press is out there running around saying all these things, but man, if I had a nickel for every time the press ran around and said that the market was going to fall, we'd have a lot more money than we have now. That's for sure. So you really have to kind of take a look at the action of the market. And we did hit a low, a while back, but we were still above that low. Today kind of hung in there and such. And again, and I'll bring this up because I think seasonality is very important too, in that fact that April is the type for the first best month since 2004. So let's see how that kind of plays out, and how this, money starts to move as far as that goes. So, these are new things. It's not the same type of reporting, the pandemic, when we talked about that, and that's when this, recordings that I started, were during the pandemic. That was pretty different, and trying to figure out how that was going to impact things and what have you. That's certainly different. But then we got back to more of a normal scenario, after the inflation situation for 23, 24 for the last couple of years. Market did quite well. So we're back into another situation where, it's hard to tell what's going to happen, right? It just is. And to assume it's going to be bad, really, that's not the way to be a good investor. You kind of have to try to find that balance between what's going to happen, watch the data, watch the market. How does the market react? So obviously, being down 10%, the market's, nervous about the tariffs, that's for sure. But again, it did that before in 2018, turned out to be false. So I think, from what I'm seeing here, that tariffs are going to stick around for a while, in my opinion, unless there's just something that really causes this scenario to fall apart. Then they finally decide that, they want to go a different direction. But I think there's a commitment here to have those. But I don't know that we know that they're going to not work as far as the stock market goes. Could you and I end up paying more at the grocery store? Possibly. What type of impact does that have on the economy? Possibly something. Uh, what type of impact does this all have on the stock market? That's a little bit different. You have to kind of understand that, you might see something in your own personal life that you see that kind of makes you nervous or, makes you wonder about things. But at the same time, the market might be looking at things in a different way. And that's why I do these videos, is try to kind of explain how the market might be looking at this. And the main thing the market's going to be looking at is earnings. So how does this impact earnings? So if consumers are spending more money, in an inflationary environment, earnings generally go up in inflationary environment. You'll see companies, I mean, look at what happened in 2022, 23, 24. Earnings went up, continue to go up and up and up. Even though inflation was higher, companies were hitting all-time highs in their earnings. So they use it as cover to basically, kind of increase prices and what have you as far as that goes. And again, that's not a great thing for us as consumers. It doesn't make us happy. But again, the stock market is looking at that in a different manner. Recessions are a different thing. Recessions are, higher unemployment, a lot less money being spent, companies that are, earnings are dropping, quite heavily. And so we don't really have any strong recessionary, you know, signals that are happening right now. Some, but nothing substantial whatsoever. And part of the reason is because we had such a strong economy to start with, and such strong earnings to start with. So we do have some room for some compression in that area, and could still quite do very well. So, keep a broad mind on what's happening in total, and let's see if this thing plays out and how it plays out. And again, if you have no taxes under 150,000, that's stimulative to the economy. That's maybe the tariffs do subtract, but they add in other areas. We'll have to see how this plays out in total, as far as that goes. So far, it's playing out okay, but I think we're still waiting for some of the other data to come through, for some of the impacts of things. But you never know. So we'll see what goes on. But anyway, that's what's happening today. We're going to have the show tomorrow. I look forward to seeing you then. It's from 12:15 to 1, on Pacific time. You can sign into YouTube, look for Talk Money with Tom, and ask live questions if you'd like. And then we'll be happy to talk to you then. Thank you very much.